The oil market's been pretty busy since our last video on it. It even managed to break through the upper side of that long-term range that we were watching for a long time, although the move through that range was only short-lived. Now, if you remember last month, we anticipated that OPEC would either hold or begin to increase production again, since the demand outlook was picking up and oil prices were continuing to rise. Now, in the end, they decided to maintain their production cuts for a bit longer, but that all changed in the latest OPEC meeting just last week. The expectations were similar to before, in that they would either maintain production cuts for longer or begin to taper them off. Now, since the outlook for oil demand was a little bit less positive than it was the previous month, it wouldn't have been out of the question for them to extend the cuts. But that wasn't the case. They decided that they would start increasing production anyway, since it seems that fuel demand is going to hold up. So they'll start off with an increase of around 2 million barrels per day from May to July, and then maybe we'll see some more production cuts being dropped from then. So that's around 2% of current global supply. It's still only a quarter of the production cuts from last year, so there is still more supply yet to come. And oil prices initially reacted quite positively. I mean, after all, it is quite a bullish sign on the demand side for oil, and on the supply side, the increases will probably just be absorbed quite easily by the market anyway. Now, at the moment, demand from China has remained strong, and the US seems to be getting more and more on track with the successful vaccination program. So being bullish about demand does seem justified. However, although things may be looking good in the US and China, it's not necessarily the case everywhere else. For example, in Europe, we're seeing COVID cases increasing once again, and big economies like Germany and France are introducing or extending restrictions again. And India, which is one of the world's biggest oil importers, is now seeing the highest number of daily cases since the pandemic started. So although there are positive signs from the pandemic point of view, and the increase in oil production is reflecting that, there are still uncertainties which justify maintaining some of those production cuts for a bit longer. Now, in other news, you may remember a few years ago when President Trump pulled out of the Iranian nuclear deal and threw in a load of extra sanctions. Well, it seems that talks are now back on, which may eventually lead to sanctions being changed, and that would obviously lead to a big increase in the supply of oil to the world. So as a result of that news earlier this week, the price of oil dropped heavily, but it does still remain in that short-term range. It's broken the bullish structure of recent months, but we're currently looking at trades based on that long-term range again, which means that we're looking for short opportunities if the price starts moving back towards $64, although that's based on the current outlook, and obviously if things change either on the demand or supply side, which has been likely to do quite often recently, then that would mean that we need to reassess things once again. But in terms of that short-term range, I'd also be interested in intraday and maybe intra-week moves based on that as well. So let me know your thoughts on oil and any other markets that you're following, and I will see you in the next video. Thanks for watching.